Welcome to another episode of Vantage Point by DG Janice. I am really excited about today's episode, not only because our guest is a great thought leader. We have interacted for many years. I have benefited personally from a lot of his insights. And when I had the opportunity to take his insights to a wider audience, I was absolutely excited. So welcome Shankar to the show. Absolutely, a pleasure to have you. You have done some amazing work. I would love for you to introduce yourself to the audience today.
Hey, first of all, thanks, Laksh. Thanks a lot. I know your show is quite a favorite. I know it's quite popular. And thanks for having me here.
Thank you.
I appreciate it. Yeah. So, by way of introductions, I head digital wealth for OCBC. So, what do I do as part of my role is essentially, build value proposition for our customers on the digital channels. Around wealth, right? Which basically is around wealth advisory, the product shelf extensions, and the engagement bits in terms of taking our customers continuously through that journey of wealth accumulation and decumulation, right? So that is my primary role, and the way I see my role is. The way I'm able to balance the customer value prop and the franchise growth.
Well, absolutely, and Shankar, I have been, we have known each other for a while. I've seen OCBC, and OCBC is a very innovative bank, from where we are seeing things. So you've been ahead of the curve. I still remember there was this time when there were these startups making all these click comparisons, etc. We can do this in 7 clicks, we can do this in 8 clicks, and OCBC came up and said we can do it in 3 clicks. Was it 3? Was it 2?
Yeah, three itself is too many, right? I mean, in the ideal state, we want the customers to go directly from their brains to being executed on the platform, but we're still not there. We still require motor skills to execute what the customers want,
right?
And therefore, yeah.
So, as such a prestigious organization and institution, there is so much change that is happening out there, in demographic, technology, and client expectations. So, as a bank, how do you prepare for this? How are you tackling this?
Is that change is the only thing that is constant,
yeah.
And therefore, as the world changes, people's needs, expectations, goals change as well. As people evolve, their needs, expectations, and goals change as well. So we do have quite a bit of market intelligence coming in, and we do have quite a number of sessions that we have with our customers through labs and through other forums where we can get to know their pulse, get to know what they're expecting of us, get to know how we have to position ourselves to be future fit to meet their needs and goals and requirements, and how do we simply continue to provide that value for our customers to give them the motivation to continue engaging with us. Yeah.
No, absolutely, and that is an amazing answer. It is all about balancing the customer's need and how do you take value propositions to them. Now, there has been a lot of discussion around COVID and digital transformation at that time, and how customer journeys have changed. I want to ask you a different question here. The world is opening up. I think we have come in terms with COVID, and soon it should be an endemic. So, how are you planning for engagement with your customers when they are interacting with you in a physical world, digital world, and a combination of both? So, how are you planning for customer journeys in a new world again?
Okay, so wealth management is basically a business of trust, right? So, because people put in their monies, they want to give people, they want to be able to feel that trust before they kind of give you their money to manage, right? So, trust is paramount, and all along, if you look at, even until 2010-15, the physical presence was very, very necessary to build that trust.
Yes.
Right? When people see a building in front of them, they feel more confident, right? But however, I think in the last maybe 5-7 years, that has changed quite a bit, because people have started to trust technology more, right? And therefore, as the trust on technology grows, people are more willing to kind of transact digitally, and physical presence is not always required, right?
Absolutely.
So having said that, the percentage of the population that completely goes virtual and digital is still small, but it's growing rapidly,
Yep.
right? So in the near term, medium term, we do expect customers to engage with us across all touch points.
Yeah.
And therefore, what is really important is to have the one bank feel, which means, when it doesn't really matter from which channel the customer comes in,
Yep.
we always give the customer a very consistent experience.
Yes.
And even if the customer kind of jumps from one channel to another channel,
Yeah.
it is a seamless experience that the customer can continue on with his or her own journey, rather than having to restart the journey. So it is a one bank experience that really matters. And if you look at our bank, we are trying to build capabilities that provide for that one bank experience. So products like secure comms,
Yep.
which allow us to contact RMs virtually,
Yes.
right? Which also allow us to kind of transact virtually,
Yeah.
are very important. So these collaboration platforms become very, very important in this transition period.
Absolutely. And no, you gave some really good points there. The omni-channel experience, the ability to connect with your RM, on the, at the point where you want to do it. And, that is really important. And it also moves towards, how the next gen wants to interact with you. They want to come into the branch. They want the same experience. Now,
So the other point that we need to remember is, while we provide for the convenience, we cannot compromise on privacy or security.
absolutely.
Right? So as a bank, we take our customers very, very seriously, and we take the relationship very, very seriously, right? And therefore, the security, the privacy, the data is of paramount importance. And therefore, whatever we build,
Yep.
while we try and give the convenience for the customer to make journeys frictionless, we are very conscious about how we secure customers' data with us.
Absolutely. No, and you make a very, very good point there, Shankar, because a lot of times, we are on platforms and, people look at the innovation velocity in some of the other industries, maybe consumer electronics or SaaS and stuff, and they feel like the banks are not being innovative. However, what they don't realize is that innovating in a regulated environment is a different ball game altogether. So and OCBC is a very big champion of it, and you have been leading. Your digital platforms are really well known in the industry. And since we are a channel, we are a show which doesn't do any sales pitch or promotions, but I do want to ask you, you have been involved in this. Can you recall a couple of aha moments, like you were like, oh wow, this is like really working from your digital experience at OCBC?
Yeah, so when I started this journey about 2.5 years back, and when I look back at where we have come to, right, in these 2.5 years, everything that we have done is quite valuable, both from a customer perspective, in terms of delivering that value proposition to customers,
Yep.
as well as from a franchise perspective, trying to propel the growth and keep our promises to our stakeholders and shareholders true, right? So, so if you look at the wealth, digital wealth domain, right? So what we started to lay out as a problem statement was, how do we connect the dots for the customer, right? So when you look at, see, wealth is not wealth often is quite difficult to understand as an area from a layperson's perspective, right? So now you have your products, you have some content being pushed at you, you have some offers being pushed at you, and now and then your RM comes and tells you something. You read a lot of news outside. So for a customer who's not very savvy, right, this becomes a very big issue for him or her to connect the dots, right? So that was our primary problem statement in terms of how do we connect the dots for the customer, right? And if you look at what we've done is we have a wealth dashboard today, which kind of connects the dots very well for the customer. The customer can pretty much see his or her entire financial footprint just with that anchor screen, right? Wow. Right, and obviously we have the foundation now that we're trying to build on, right? And that anchor point is the most fundamental to the digital wealth proposition, where you can basically anchor and bounce off that page across multiple journeys that you want to take, right? Whether it's an advisory journey, or whether it's a product journey where you're trying to buy a product, whether it's a portfolio review journey where you're trying to review your portfolio in terms of performance, in terms of just visually understanding how your portfolio is, in terms of risks that you might be carrying, like for example concentration risk or ESG risks, which is quite new nowadays, right? So these are the things that we are packing in for the customer. So I want to use the word she, because I think traditionally we've been using he. I want to use the word she going forward to basically kind of connect everything for the customer to,
absolutely.
Take her journey forward,
Yeah, and so before we started recording, so yesterday I spoke to 5 or 6 customers who extensively use OCBC. And one thing that came out from that conversation was how OCBC is democratizing investing. And what I mean by democratizing investing is today, you can buy some unit trust which can get you access to precious metals, right? But that is not really access to precious metal. It is to access to companies who are in the business of precious metal. But what OCBC has done differently is now with any amount, you can go and buy silver, gold, etc. on the platform for any simple amount. Would you walk us through like that thought process journey and what got you there?
Is we have tried to keep investments as bite-sized as possible. So if you look at our precious metals offering, gold and silver, right? You could buy precious metals at as little as 35 cents.
Oh wow!
Right. So that is something that is a real kicker, right? So obviously the reason why we implemented precious metals last year and we ran really fast trying to implement it is because we kind of knew that we were getting into an environment where all the liquidity that came in post COVID to manage the pandemic, rightly so, right, is probably going to stoke up inflation, and people, our own customers, are probably going to look for avenues where they can park to their monies as a store of wealth, right? And we are seeing that our customers have taken to our precious metals offering very well, and so this is a win-win for both of us, right? I mean, in terms of our customers, they can invest as little as 35 cents, and it also helps the franchise because it helps our growth as well.
And the AUM stays with you as well.
Yes,
so,
of course.
That also helps. So that is really amazing, and very insightful. Now you have a really good offering in the wealth management space. Now I do want to ask you this question. There are so many platforms out there, and a lot of them are doing well as well. How are you keeping your own platform engaging, sticky, and offering more value to the customer at this point of time?
Okay, unfortunately, I have to touch upon the same jargons and words that have been overused in the past, let's say 2-3 years. But yeah, so I think when we move from a physical world to a digital world, how do you continue engaging with the customer as if it was a one-on-one kind of a engagement, right? So in the physical world, it's very easy to do that one-on-one engagement because it's a two-way street. You know in real time what the customer is asking you or what the other person is asking you, and you kind of respond.
Yeah.
So I think what we are trying to do is kind of mimic that in the virtual world as well, in the digital world, in terms of personalization.
Yeah.
So, of course, personalization is a very big word, and now hyper-personalization is even bigger word.
Yes, absolutely.
Right? But I think that is the path that everybody has taken. So while hyper-personalization is something that everybody is pursuing, ultimately it is how you implement it on the platform,
Yeah.
and how you continue to evolve the capability is what makes the difference, right? So we would like to get to a state where n is equal to 1, which means I have that one personalized idea that is only for you as a person, because you're so unique as a person that I have this unique idea for you.
Right.
But I think we are quite far away from that. But what we are trying to attempt is to personalize based on not only data that we have, but also use AI models that constantly learn about you as a person as you continue your journey with us, and continue to personalize offers for you, continues to personalize content that you might be interested, continues to personalize other stuff that you might be interested, right? Even outside of wealth,
Yeah.
is what I'm trying to say. So we create the stickiness with the customer. So the customer knows that, here is a bank that understands me as a person, that understands me as an individual, can relate to my needs, my goals, and give me something that is interesting to me. More than interesting, it's valuable to me, right? So I think we've started on the journey.
Yeah.
Obviously, it takes some time for us to kind of get it to a stage where it really starts to impact, right, customers. So we hope that we will be able to build that stickiness through that engagement. So one is to build that engagement, right?
Right.
The other one is, once the customer is interested, right, how do you then get the customer from point A to point B in a very frictionless manner, right? So your journeys are important, the UI UX is important,
Yeah.
the ease of fulfillment is very important.
Absolutely.
A lot of people can go very fast until the signal, right? And then if the signal is red, you have to still wait.
Yep.
So we don't want those things to happen, right? It should be like a highway that the customer goes from point A to point B without stops, is very happy when he or she reaches point B.
Right.
And even after point B, he or she knows that that is not the end point, because the world is changing and we constantly keep the customer informed of how the world around the customer is changing.
Yes.
And then we constantly keep nudging the customer into things that the customer could do in order to better their financial positions. Yeah.
No, absolutely, and that is one of the best answers I've heard about hyper-personalization or personalization at scale. I am a big fan of it. I've been, I think, shouting for the last 2 years that it would be the biggest opportunity for wealth management firms out there. Now, a quick question: how difficult it is to go on a journey? What are the challenges, or how difficult it is to go on a journey of a hyper-personalized advice? We were talking about content, ideas, etc. how difficult is it to get to a point where you are sending hyper personalized advice to a customer?
Okay, so the way we treat our channels today is we have the assisted channel and then we have the self-directed channel,
Yes.
right? So in the self-directed channel, we provide for customers all the tools and capabilities that the customer requires to make his or her own decisions, okay? So technically, quote unquote, it's not advised,
Okay.
right? But we do provide customers with the tools and capabilities that allows customers to make their own decisions if they are capable of.
Okay.
Right. So when you talk about advised, then it is a whole 9 yards, right? In terms of doing your needs analysis, in terms of understanding your goals, understanding your financial position, understanding where you want to be in terms of goals such as life goals, for example, right? And then coming out with a plan that can be executed, and having those regular meetings with the customer to kind of tweak the plan, to modify the plan, for example, or change the plan if the customer's goals have changed, needs have changed, wants have changed.
Yeah.
So that is the 9 yards of advice, right? Now, in the future, I do expect that digital platforms will also offer this advice.
Yeah.
But I can tell you that whenever that happens, OCBC will be completely ready to take that opportunity. Yeah.
Absolutely, and I think a lot of people, when they just hear the word advice, they do not realize the whole journey that comes in, with the profiling, need analysis, discussing of long-term plans, preferences, etc., and then getting there. So I get your point that a platform can do that at a point of time, but we are not there yet. And whenever we are there, we are hoping OCBC is going to be the flag bearer of doing this. Now, we've talked about platforms, hyper personalizations, etc. One of the cornerstone of the wealth industry has been personalization with RMs, right? And with all of these platforms coming in, and a lot of hybrid wealth management being pushed out, where does that leave the RM? So, if you are an RM, what are you thinking today? How can you still stay relevant in the digital world?
Oh, you know what? Like I told you, wealth management is a business of trust.
Yeah.
Right? There's nothing that can replace touch and feel, right? And even in today's environment, touch and feel is very, very important, right? So while we do see customers making investments in a self-directed manner, predominantly they do reach out to RMs, right? So RMs are not going anywhere,
Okay.
right? But what we are doing is to be able to use our RMs more effectively, right? So in the past, RMs could do business only when they physically met customers, right? In a coffee shop or in the office or in the customer's office, wherever, right? But today, because technology has grown and we have adopted platforms that allow virtual meets rather than physical meets, it has only empowered RMs to be much more effective, right? So if customers are comfortable dealing with you in a digital environment, then cut the travel time. And it makes RMs much more effective in terms of their time utilization.
Right.
And obviously with the digital transformation in terms of STP, process automation and so on and so forth, there is so much efficiencies that are getting built on the platforms as well.
Right.
So from an RM perspective, one, the RM is getting more efficient in terms of using his or her time. And second, the systems are also enabling the RM to process, the outcome of any meetings much more quicker.
Right? Absolutely.
Right. So in the future, I believe RMs will have more number of customers, maybe, because they are now armed with all the digital tools. But In the near and medium term, I don't see people completely shifting to digital whenever, and especially when it comes to larger ticket sizes. Yeah.
Absolutely. And I think the industry is also seeing this, that, even though the big five of private banking have seen a drop in number of RMs, but the revenue per RM is continuously going up. There is a report out there which, quantifies this. So I think the industry is seeing more RMs being productive and, managing a larger customer book, and, you continue to see that trend. So thank you so much. Now, shifting gears a little bit, because you have talked about platforms and everything. And what we have seen in Singapore and some of the other regions is there has been a mushrooming of platforms on wealth. There is so much increased competition. Some of them are offering no platform fee. Some of them are saying 100% trailer fee rebate, and then some say zero commission, etc. There are a lot of. Is the wealth platform proposition going down to zero?
Okay, good question again, right? I mean, this has been the hot topic for the last 2-3 years,
Yeah.
right? And we already know the kind of players that have made it big.
Yep.
Between 2020 April and 2021 December, and we've also kind of seen what has happened to some of those players between 2022 Jan and now, right? So it's a double-edged sword, right? So I want to take you back to what I said when we just started this conversation.
Yep.
I think the way I look at my role is somebody who can balance delivering value for my customers,
Yes.
and delivering value for my franchise,
Right.
and my stakeholders, right? So in that continuum, it is just not delivering value for one party, right? It has to be a win-win for everybody in the ecosystem, right? So everybody in the ecosystem kind of benefits in the medium long term, right? Now this race to net zero, okay, is good from a sustainability perspective, but I don't know whether it's so good from a business perspective,
Yeah.
right? And I can tell you that the platform fee model, right, kind of really tilts in the favor of the platform provider if your investment horizons are longer. Like for example, we as OCBC, for example, unit trust, right? We just charge you once
Yep.
at the time of buying.
Right.
So assume you hold that unit trust for the next 20 years
Right.
or next 5 years, right? You've just paid once,
Yeah.
and you don't pay anything more, right? But if you go on to a platform fee charging model, you basically paying for the same investment that you did on year one for the next 20 years, some kind of a fee, right?
Yes.
So it really depends on if you have a long-term view of your investments, if you're really looking at planning for your retirement, for example, which is a marathon, 10, 15, 20 years. And I'd like to take this opportunity to the people who are listening to us to really look at wealth accumulation as a marathon rather than a sprint. Because what is happening in the recent times with the kind of volatility that we've seen in the markets is, 2020 and 2021 were so easy years to make money.
Yeah.
So these are exceptions, right? So while I don't disagree that there is a recency factor that influences all of us, I think it is important for us to recognize that wealth accumulation is a journey. It is a marathon that you run over 5, 10, 15 years. And I can tell you, when you run a marathon over 5, 10, 15 years, accumulating your wealth, you would come out so much better than if you're focused on 1, 2, 3 months.
Yeah.
Right? So now coming back to answering your question, I think it really depends on your time horizon. If you have a much longer time horizon, which should be the case, right? Paying one time is much more beneficial to you from a cost perspective than trying to pay over every time over the next 5, 10 years.
Oh, no, absolutely. And Shankar, you made such an interesting point there, and I had not thought of it in this way, that, that how long are you going to hold this? So does this one-time fee, is it really that big a problem if you're holding it for 10 years? I don't think so as well, and so that is a great point, and
Yeah, in fact, I'm not saying we will not reduce the cost to our customer.
Yeah.
In fact, it is always our endeavor to provide value for the customer.
Absolutely.
And cost is one of the components. It's not the only component,
Yeah.
right? So if I'm giving you products that give you returns in the range of 10-15% compounded, right? An 88 bips cost,
Yeah.
right, may not be great, right? So it's always a value versus cost kind of a thing that you need to have in your mind, right? But and as we as a bank become more and more efficient, right, then it gives us the leeway to kind of look at, the value that we provide to the customer in terms of, what are we charging the customer and so on and so forth. That is something that we will always keep in our mind, because we always have our customers in the center of things.
Yeah, no, absolutely. And I think you made some really interesting points there. And one of the points that you made earlier was also about trust, like who do you see surviving so many economical upcycle, down cycle, etc. and stuff. So that there is trust has its own value and its own cost as well. So that was great. Now you mentioned something that the last 2 years have been a bull market, and we have seen very high amount of retail participation. One thing that in the US, when I'm talking to people, is how gamification has made it easier for retail investors. Some people say it has made it too easy, and they are doing too risky trades. But gamification has played its role in investing in the last 2 years. One, what is your thoughts on that? And two, how do you see that being implemented in the wealth management space in Singapore towards long-term investing and wealth accumulation, etc.?
Okay, I want to talk about extrinsic motivation and intrinsic motivation before we get to the gamification point, right? So extrinsic motivation is the rewards, and it could also be punishments. For example, I mean, if you don't do homework, you get whacked at school. It could be an extrinsic, motivation to complete your homework, right? So typically when we talk about in business terms, your extrinsic motivation are quote unquote rewards, and the game aspect of it helps to build stickiness when you start off, because you want to play the game, you are interested to get to the next level in the game, and so on and so forth. And hopefully you keep the game makes you do the same things again and again, and you form a habit, right? But ultimately, for the habit to sustain, the motivation has to be intrinsic.
Yeah.
And what I mean by intrinsic is you intrinsically have to be somebody who wants to, I'm talking from a wealth perspective, right?
Yeah.
Who wants to secure your financial future.
Right.
The bank or the provider has to provide you products that have that intrinsic value that you see as value, right, as a customer. So while gamification can kind of open the door and maybe lead you a few steps into the house, ultimately if the house is shabby, ultimately if the house is not quote unquote livable, does not have value for you, you're probably going to walk out, right? So that is my take on gamification.
Right.
It is something that allows businesses to capture customers' attention to start with, but ultimately the customer, you have to deliver value for the customer to stay in your house, live in your house, continue to enjoy living in the house. And like we spoke earlier, things keep changing.
Right.
The house also needs to keep changing.
Right.
What is value today may not be value 10 years later, right? And therefore it's important for us to kind of keep track of what customers need, keep track of their changing ambitions, changing needs, changing goals, and pretty much, change ourselves to fit into that future.
No, absolutely. And now when you say making the house livable once the gamification door is open, how do you make the house more livable for like the next gen, current gen customers, when they are, let's say we have done a gamification experiment, we get these guys in. How do you keep them there now?
Okay, one is obviously there are a lot of things, right? One is the ease of use, right? In terms of the journeys, the UI and UX, which is contemporary, which is easy to use, and so on and so forth. Second is frictionless, right? And real time, right? I think real time is becoming paramount now. You look at 5G, for example. What is the promised speed?
Yep.
Right. So I think more and more customers are going to take quote unquote speed and real time as a given. So you cannot have a transaction that you hit the submit button and then it fulfills in 2 days, right? Yeah. It has to be instant, real time.
Yep.
If you buy precious metals today on our platform, it's instant, real time settlement, right? If you buy currencies on our platform, instant, real time, right? I can buy gold now and sell gold 20 seconds later.
Oh, wow.
Right? So I think real time is paramount, frictionless journeys is paramount, adoption of technology is paramount, because technology is so rapidly evolving that, and the adoption of technology in today's millennials and Gen Zs and alphas that is going to come in, right, is so rapid that technologically you have to be a very strong player, right? So if I were to make my house future fit, these are the things that I would kind of focus on, right? And obviously the products that I have in my house have to be top notch. And if you look at OCBC as a group, right, when we come together as a group, nobody else has that kind of strength that OCBC has. Yep. We have an asset management arm, we have an insurance arm, we have a private banking arm, we have a retail arm, we have a corporate arm. So the kind of strength that we have as a group is second to none.
Absolutely.
And I think given the leadership that we have, you can only expect us to kind of climb that ladder quite fast.
And I must compliment you and the execs at OCBC, because you have done a very wonderful job of bringing these capabilities together. Lot of times, you will see, there is asset management, there is insurance, there is this, but those arms are siloed. So, even those same teams are working with, different, like the same divisions are working with different players rather than bringing all of those, offerings together. So I think OCBC has done a very, very, very good job of, bringing it on the platform.
So I think if you look at it from a design philosophy perspective, you put your, which is my biggest asset as a business. It's not my platform, it's not my building, it's my customer. I put my biggest asset, which is my customer, in the middle of things. Now, I try to deliver value to my customer, who is my central focus, with all the strengths that I have, all the capabilities that I have, and I stitch a journey for the customer and deliver value for the customer with all the capabilities and strengths that I have. So like, for example, if you look at Robo, for example, Lion Global is the one, as you know, is an asset manager, right? And is the one who helps us to curate portfolios for the customer, right? So we're drawing upon the strength of Lion Global as somebody who can, quote unquote, construct and manage portfolios to be able to, provide portfolios for us on Robo, right? So we are constantly looking at how do we deliver more value to the customer, drawing upon strengths as a group, right? So if you look at, for example, our insurance journeys on the platform, GE is the provider, but we basically have piped into GE, right? So you as a OCBC customer can seamlessly buy insurance from banca products, basically from GE through the OCBC app.
Right.
If you look at equities, for example, OSPL is our broker, but you have seamless access from OCBC.
Right.
So essentially, what I'm trying to say is, you put the customer in the middle of things, and then you build journeys around for the customer, And not every journey and capability needs to be your own capability.
Right.
You can you pretty much leverage upon the strengths and capabilities as a group, and then provide the best value for the customer.
Absolutely, and I want to clarify, like when he says GE, he's talking about Great Eastern. So, because we have a large audience in India as well, so they might understand GE a little differently. Shankar, that makes a lot of sense, keeping the customer at the center and looking at, how do you enable them and building experiences, product lines, etc. That work for them, So that is, it is very refreshing to hear that, banks talk like this. If you are having a Steve Jobs moment on, this, all we need is somebody to ask an obnoxious question, So you will have a perfect Steve Jobs moment. Now we have talked about what has gotten us here. And you've absolutely done a fantastic job, yourself and as OCBC. Now, let's look at the future. And we want to talk to you about future trends, So, one, digital wealth. How do you think it is changing in 5 years?
Okay, man. So, I think the pandemic, right, is people call it the chief digital officer, right? Many a time, right? So I think what has happened is that it has just accelerated several trends that were already present, right? And in the next 5 years, if you ask me, I think these trends are just going to accelerate, because one is to have a trend, the other one is to be able to adopt these trends.
Absolutely.
And make systems and processes and the organization, future fit in terms of changing business models and so on and so forth, right? So I think there are a few trends that we see, right? One is the demographics, changing demographics as a trend, right? Our customers are obviously becoming younger. There is a huge intergenerational wealth transfer that's happening.
Yep.
And now the wealth that used to be in the previous generation is flowing to the next generation, which is much more tech savvy.
Yep.
And wants to do stuff on the digital world, in the digital world rather than a physical world.
Yeah.
So that is a huge trend that is bound to have impact on us and everybody else,
right,
who to kind of continue doing business, right? So that is one trend. The other trend that we see is like I spoke about technology. Technology has become an enabler, right? It's become the umbrella, right? And we have to be technologically, quote unquote, superior, right? To be able to deliver deliver services to our customer and deliver value to our customer, right? As paramount. The third one that I see is sustainability. Like I said, sustainability is of paramount importance. There is no two ways about sustainability. Okay. We have only one planet, one home, yes, right? And therefore, quote unquote, integrating, sustainability into everything that we do is very, very important.
Absolutely.
So I think these are some trends which will accelerate into the future, and this acceleration has already started.
Yep.
And I expect it to.
Yep. So Shankar, we have talked about the increased amount of competition, and in Singapore today, if I go out there and I just open a privileged banking account, I can get a new iPad, right? So customer acquisition costs are through the roof. Now, there have been so many discussions about wealth continuum and some of the other concepts, So how does a digital platform like you lower your customer acquisition cost? Plus, because you're part of a bigger group, how do you prepare, these customers for the bigger journey, and how do you, the wealth continuum concept, how do you, prepare for that?
Okay, so before answering that question, right, let me ask you a counter question.
So before I answer any question, 15 episodes have been recorded. This is the first time I'm being asked a question. So please do. Thank you for asking me a question.
So I don't know what smartphone you have,
right,
but did somebody put money in your pocket to buy that smartphone?
I know.
Right.
I wish someone
So why did you buy the phone that you have?
Utility, there is so much that it makes, there is so much value I get out of it. I don't
So the
think
simple answer, I believe, is the value
yes.
that you derive from it, right? It could be whatever smartphone you have, but you saw value in that smartphone. Nobody, maybe you've seen some ads and so on and so forth. But if you are buying different generations of the same smartphone, right? You clearly see value in the smartphone to stick to that smartphone.
Yeah.
So we're talking about two things. There's an extrinsic motivation. Maybe you saw an ad. Maybe the whole world is talking about a certain phone in some era, right? When it was first launched, maybe, and you want to own it, you want to have your hands on it, right? But ultimately, if you're sticking to that same phone for the next 5 years, 7 years, 10 years, continuously upgrading when the new phone is launched and so on and so forth, you clearly see value in it that you want to stick to that same phone, right? So when you talk about acquisition, right, it is a similar ball game,
Yeah.
so to say, right? So similarly, it is about how do we communicate the value proposition that we have to our customers most effectively. So I think here we ought to kind of appreciate our marketing to have been able to communicate this value to our customers, right? Like I say, everything that we have has a DNA. It has a soul, right? Now, if you are able to communicate this soul to the customer, and if it is able to resonate with the customer, is when you make a connection, right? And if you look at all our marketing efforts, it's not about what we can do. It is about telling the customer how the customer can benefit from this capability, looking at it from a customer's perspective, right? The value proposition from a customer's perspective, right? So that is one. The second thing is, once the customer is in the pipeline, right, you have to make it as seamless as possible for the customers to get onboarded onto the platform,
Yep.
right? In terms of making the onboarding process as simple as possible, as seamless as possible, as real time as possible.
Yep.
So the customers can get onto the platform as long as the customer is legal and and once the customer is on the platform, the rest of the journeys, the rest of the house is available for the customer to kind of flow through in a seamless manner, right? So if you look at the evolution of the app today, these are the things that we are focusing on to make things easy for the customers to onboard themselves. And once the customer is onboarded, what are the typical next things that the customer is looking for, and how we can, position or personalize stuff for the customer,
Right.
that it's available for the customer to kind of continue the journey. Yeah.
No, thank you for that wonderful answer, and you have been really candid. Before we let you go, we'll ask you one last question, and that question is, what would you like to change in wealth management today? One thing that you could change.
The one thing that I really want to change is to de-jargonize wealth. I think even if you look at the percentage of the population that is comfortable taking their wealth journeys towards financial independence, I think it's a very, very small fraction of the 7-8 billion people that we have in the planet today, right?
Right.
So, I mean, as somebody who's very passionate about wealth management,
Right.
as somebody who is passionate about not only my own financial independence,
Right.
but also to kind of help others in the same journey.
Right.
I think the one biggest stumbling block for people is that when people talk about wealth, it is still quite complicated.
Yes.
And I think that is one thing that I want to strive to make it easy for the common man to get onto this train and fulfill his or her dreams.
Absolutely. Dejargonizing wealth management is that what we'll aim for. Thank you so much for being here, Shankar. It was an absolute pleasure speaking to you. There were so many aha moments. Like I was thinking, oh wow, this is an amazing answer, and you made me rethink about how I'm managing my own wealth and how I will look at digital journeys differently. Thank you so much for being here.
Thank you, Laksh. Thanks for having me over.
Thanks,
Thank
man.
you.